Welcome to the WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. Today, I'm joined by Mike Logozzo, CEO, and Tom Kutzman, CFO of reAlpha Tech Corp, NASDAQ ticker symbol AIRE. reAlpha is a real estate technology company developing an AI-powered home buying platform intended to coordinate real estate brokerage, mortgage, and title services where available. The platform is anchored by Claire, reAlpha's proprietary AI buying concierge, and a rebate-at-closing model designed to reward home buyers who use multiple reAlpha services. Mike was appointed CEO in 2025 and brings a background in financial services and operations, including 18 years at BMW Financial Services and innovation leadership at L. Marks. Tom serves as CFO and brings more than a decade of capital markets experience along with strong operating experience. He most recently co-founded digital home buying company Prevu, and he served there as CEO prior to joining reAlpha. Also joining is my WTR equity research colleague, James Kisner. Good morning, gentlemen, and thank you for joining me.
Thank you very much. Happy to be here.
Yeah, thanks for having us.
Mike, for listeners new to reAlpha, can you give us the quick elevator pitch to include what the company is developing and what makes the platform different from traditional, what I would actually arguably say are highly inefficient and frustrating home buying experiences for consumers previous to your platform?
Sure, happy to. I start by saying most companies in the home buying space, they specialize in one thing. For example, they're a realtor, a mortgage broker, a title company. reAlpha does all of these on a single platform that's powered by AI. And we believe that gives us four advantages. First, we capture revenue across the entire transaction. Second, our tech is purpose-built for home buyers. It's not bolted on or stitched together. Third, our commission rebate gives cash back to customers, and then it also drives multi-product adoption through cross-selling. And fourth, our integration, it reduces the inefficiency that frustrates the home buyer in America, including yourself. So that's reAlpha in a nutshell.
Great. Well, thank you for that initial overview, and I'll turn it over to James to ask a few questions.
All right. Thanks, Tim, and welcome everybody again. I want to double click on some of what you touched on there. The one reAlpha model, so bringing brokerage, mortgage, title, and AI together in a single coordinated workflow, it seems to sit at the heart of your strategy. Can you just talk more about the vision behind that and where you're really starting to see that integrated approach pay off for the home buyer today?
Sure, James. When you look at the customer experience today, right, it's costly, complex, fragmented. The average home buyer juggles like a real estate agent, then goes through a mortgage broker, then a lender, then a title company. Each of those, they have their own processes that a customer must navigate, and they rarely communicate with each other, let alone talk. In addition, we've learned that the industry is basically starved of automation. A lot of the incumbents are too constrained by legacy models to really fix it, and it just works. So it just stays the same. And we believe that gap's our opportunity at reAlpha. We have one unified platform where we put the home buyer in the center of it, and then we build the processes around them. As we mentioned, it's powered by AI, but it's also backed by human experience and expertise. And we'll talk about that as we go through the process here. We have four key features. We have this consumer aligned pricing model. It's a commission rebate at closing. It rewards buyers for bundling our services. We have Claire, which is a proprietary AI assistant that provides 24/7 search, education, transaction support throughout the process. Third, we have true vertical integration. Because we own real estate, mortgage, and title, the handoffs disappear. And fourth, we have a scalable tech-enabled operation. So because we use AI and distributed teams, our margins expand as our volume grows. So a unified platform, it allows for greater transparency to the customer as well as those servicing the customer because we could see them through every step in the process.
That sounds very compelling. Wish you guys had been around for my last home purchase. Prevu closed in November of 2025. So maybe you can update us on that, like how the integration is coming along, and what role that it's playing in the platform.
So the integration is coming along very, very well. Better than I had even hoped. And Tom is living proof of that. Tom is now CFO of reAlpha. He was the CEO of Prevu. So, he came in and took a leadership role, an executive leadership role, with the company. We also elevated several people by bringing in the talent. So Tom Hovanak is now the head of realty. And then we created three regional heads as well, and two of which are Prevu folks. So, the talent in and of itself has been great. We've been synchronizing the pricing models between reAlpha and Prevu. There was one commonality there with the way that they also used rebates, and we knew that culturally we were very aligned there. So we just had to synchronize the pricing models, and things are going very well there. We're realizing synergies, right? Back office synergies with accounting and finance fully integrated, as well as marketing. We're serving more markets across realty. When we acquired Prevu, I think we were in two markets, and now we're in 12 plus DC, and continually looking to grow there. And then the cross-selling is organically happening between realty and mortgage in both directions. So, some people like to come in through mortgage first. They want to see if they're pre-approved and for how much. We ask them, are they represented by a realtor? And if not, we cross-sell, and vice versa. If they come in shopping for a home, we ask if they've been pre-approved, and we do the cross-selling that way. And we're constantly working through the technology integrations, but the core platform is in place right now.
Oh, that's a great update, and it sounds like a great fit. So you guys are somewhat unique in that AI is woven throughout the entire platform. So you've got Claire on the customer facing, concierge, you've got the loan officer assistant on the back end, the kind of home buying hub, bringing it all together. So how is AI changing the home buying experience for the customer? And perhaps as importantly, how is it changing the operating model on your side of the business?
So AI is helping us in multiple facets. On the customer facing, Claire is viewed as that concierge. It has memory, having knowledge of the whole transaction and where everything is in one place. It's hugely valuable for us, as well as making it more seamless for the customer. On the back end, we've used AI to help our experts become even better. So, like for example, we created a loan officer assistant that handles the back end data processing. So loan officers, they have like a more streamlined focus on their most important work, which is like interacting with customers and closing deals. So it's been very helpful that way, and obviously made them more efficient. And then even internally, like in our headquarters and our corporate functions, we're embracing our AI tools, and we're seeing massive productivity gains. And I think, yeah, Tom will probably touch upon that later when we get into some of the finance topics. But we're seeing it again on the front end with the customer, on the back end with our service providers, and also internally.
That's great. All cylinders. So let's talk about the proposed InstaMortgage acquisition. So without getting into the specific status of the deal, can you just frame for us why this transaction matters strategically? Like once the deal closes, what would direct mortgage lending add to the platform and to your economics on each mortgage transaction? And maybe at a high level, what investors should understand about the state-by-state regulatory work involved here?
Sure. I'll give you a little bit of background on InstaMortgage. InstaMortgage is a mortgage lender. So if you recall earlier, I had mentioned that we have realty services, mortgage brokerage services, and title services. So this gives us the added capability to not only be a mortgage broker, but also a lender that could lend directly to consumers, which can have a higher margin, than brokering itself, and offer a better variety of lending products for our unique customer segments. So we're really excited about that. From a footprint standpoint, we're currently in 32 states with reAlpha Mortgage. With the overlay of InstaMortgage, InstaMortgage is in 31 states, but with the overlay, I think it gets us to like 40 or 41 states total then with mortgage capabilities, which is great. And we're currently going through the approval processes or change of control processes from the definitive agreement to acquire them back in the end of December. And I think it's really important for people to understand that it's not just a federal approval. Each licensed state requires regulatory approval to close. And the fact of the matter is every state has their own process and their own authority matrices, and Tom and I, we joked, I don't think we've ever been fingerprinted more in our lives, with the different states, but, you have to honor the process and respect the process. And we are highly optimistic for closing. We know we're really close. We can't disclose too much, but we're really excited to get this thing across the finish line here, hopefully very shortly.
I'm sure the red tape will be worth it. Let's turn to Tom. Um, so you framed growth and profitability as linked and not a trade-off. So with the recent initiatives in mind, how are you thinking about the path to profitability from here?
Yeah, so I think we want to just be able to control our own destiny and really optimize our cost structure to make sure that every dollar we spend is driving a return. So that's where this return-driven spending initiative that we recently announced, came to be. I took my seat in February, late February, and one of the first things, I was tasked with was, bringing my operational lens from my prior company to the reAlpha platform and understanding that we're driving the maximum impact with every dollar we're spending. So we did go through a slight restructuring of our cost structure. We've realigned our headcount. We have been seeing some benefits from the productivity gains from AI, which we're leveraging. We are going through optimization of our vendor contracts, some of our different consulting and vendor relationships. So going through that process, we've identified at least $2 million of annualized cost savings. And what does that do for us? It sets us up for a better, a smaller burn. We are a small cap company. We are still focused on growth, but we can control our burn. And so that sets us up for a much better cost structure going forward to focus on growth in the right way. And when you look at some of the other costs from 2025, we previously had a media for equity deal, which was a non-cash expense. Obviously, some people look at it in a different way in terms of the size of our net losses last year. However, that's something we're not renewing this year, and that will show additional benefits on a net loss side, separate from the annualized cost savings, just that we didn't renew that relationship. So we're focused on narrowing those losses. But then pairing that with other future opportunities, we have been an acquisitive company to date. So pairing future, once we get past the closing of an InstaMortgage type transaction, we have other opportunities in the pipeline that are profitable transactions that could further accelerate that path to profitability, aligned with that cost structure that we've reset.
Great. That's helpful perspective. So the spring home buying season is arriving against a pretty complicated macro backdrop. So you've got mortgage rates that have been somewhat stubbornly elevated. Inventory is still constrained in many markets. Affordability is a headline issue. Just how does that environment affect reAlpha's near-term demand picture? Is there an argument that the friction in today's market actually accelerates the case for what you're building?
Yeah, so I mean, home buying season, obviously, when you look at our industry, typically Q2, Q3 are seasonally busier periods. I'd like to say that home buying season probably arrived a little bit late this year. A geopolitical backdrop with a war in Iran. Q1, I think created pause for some home buyers, but what we're seeing now as we accelerate into the core part of the season, life activities, life events occur. People still are going to buy a home. They want to move before that next school year. So we are seeing activity, seasonally go through that normal cycle of pickup. So we're very encouraged by that. And then you hit the nail on the head in terms of, mortgage rates are elevated given the interest rate picture right now, and home prices haven't really fallen, since the post-COVID world as we came out of that. So affordability is still an ongoing issue for the majority of home buyers in America, and our rebate model really stands out when you're faced with both high home prices and high mortgage rates. So I think we're in the right place in the right time.
Yeah, that makes a ton of sense. Just stepping back a little, given everything that you're building, how are you thinking about funding the business over the long term and making sure you have the kind of cash runway and flexibility to execute on the plan?
Yeah, so we are an emerging small cap company. So until we reach profitability, we will need to continue to raise capital over time to fuel that growth, like other many great companies that blazed the trail before us. But we're always looking at efficient sources of capital. And when you pair with our story, the acquisitions we've made, the progress we've made over the past few years, and some of the opportunities on the acquisition side up ahead, there's a lot of demand and interest in potentially being a part of the financing around those types of acquisition and that future growth. So we're very happy and encouraged by the relationships we're building on that front. And as we noted in our 10Q, we haven't used our ATM since January. We did some small proceeds in January, as noted in the Q. So that's just not an active part of our strategy at the moment. We do get a lot of questions about that. Just going back to the point I made earlier, of controlling your own destiny, controlling your cost structure and making sure you're maximizing every dollar spent only sets you up for future success, with future capital raises and your future growth. So we're really happy with how we are aligning for 26 and the years ahead.
Helpful. So one more for you before we go back to Mike. Just could you touch on the 1-for-25 reverse stock split? I think that was effective at the end of April. Just any kind of quick perspective you'd like to give investors as you put that step behind you and look ahead.
Sure. Yeah, the reverse split was a necessary action, for NASDAQ compliance. We did complete our 10-day trading period back above $1, so we did regain full compliance with NASDAQ for that dollar minimum bid process. So again, just sort of a compliance thing that we had to do. And when most investors that have been around, obviously, James, you've been an analyst for a long time. There's volatility that comes after a reverse stock split. It's normal, it's expected, but we are seeing that stock stabilize after that. And I think people are coming back to the story and how we're executing that. This was a compliance nature and not a distress signal.
That's good to know. So thanks for that, Tom. I'm going to go back to Mike here for one kind of final question to wrap up. So as we talked about, home buying season's underway. Platform is still continuing to come together. Just what are your key priorities for the rest of 26, and what should investors be watching for over the next few quarters that would tell them that you're executing on the plan?
So first and foremost, we'll continue to work towards the InstaMortgage closing. We're pretty darn close. Just got to get across the finish line, and need to be responsive if there's any last minute questions or requests to come in. But like I said, that is a huge priority for us, and we're dedicated to getting that across the finish line. As Tom mentioned, it's a spring and summer season. An immediate priority for us is conversion. So, taking platform traffic and turning those into transactions. So working with the team diligently there to make sure that we're understanding where customers may be dropping throughout the funnel, making fixes and continuing to increase conversion there. By doing so, we're optimizing and improving our technologies along the way. And the other thing we need to do is we need to reduce the state service disparity between brokerage and mortgage and title. Once InstaMortgage comes on, I had mentioned earlier that I think we'll be in 41 states, but in title we're currently in 3. So the next logical step would be to bring a large title company to come in and address the disparity there. I would deem that the platform to be pretty solid and complete and scaling across the US at that point. And then we'll continue to expand our realty licensing. We're already doing that, but we'll continue to do so. I had mentioned that we're in 12 states plus DC. So it's easier to grow realty organically into these other states. And that's what we're planning on doing and actually doing as I speak.
Thanks. I really love seeing AI transform another industry that really needs a lot of help. So, thank you very much. And I'm going to pass it back to Tim for closing comments.
Thanks, James. Mike and Tom, thanks for joining us today to discuss reAlpha Tech. Very intriguing model that I think was badly needed in the marketplace. So best wishes going forward, and thanks for your time.
Thank you very much. We appreciate your time as well.
Yeah, thanks for the conversation.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small-Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.